we have the management of MTAR Tech joining us on the show to talk about the quarter gone by. We have Mr. Parvat Srinivas Reddy, who is the managing director at MTAR Tech, joining us. A very good morning to you, good afternoon to you, sir. Thank you so much for joining us on ET Now. And firstly, to start off with, what has been the order inflow in the quarter gone by? Earlier, you had actually given a guidance of around 850 crore rupees for the entire financial year.
The order inflow for the first quarter is more or less more than about 200 plus crores. That's what we have received in the quarter one for this year. And the closing order book for the financial year FY23 would be around 1,000 crores is what I've said earlier.
So with your old order book at about 766 crores, as you mentioned, your guidance of 900 to 1,000 crores, is it still achievable?
Absolutely not. It's been given with a lot of thought process, and we have the enough orders in the pipeline as well. So we will definitely achieve the closing order book of 1,000 crores by end of this year.
Right. From which segments are you actually seeing the new orders come in for the company? And also, if you could tell us what's going to be the execution period for these for these orders?
So most of the orders we have received are from clean energy. We obviously received orders from nuclear, space, and defense as well. So the clean energy orders that we are receiving is for the first quarter. What we have received is for the next calendar year, and all these orders have to be executed within 1 year time frame.
So you have guided for a margin of 30%, but your margins in Q1 stood lower at around 27%. So will margins get better in the coming quarters?
Yeah, we'll still stick to our guidance of 30% plus minus 100 basis points. Normally, the revenue growth for the second half is much stronger, and definitely by the end of the year, we would still maintain that kind of margins that we said earlier. There should not be any issues with that.
Let's talk about the top line growth, and your guidance was about 55 to 60% for FY23. And if you look at the quarter one, your growth has actually overshot that guidance that you've given. So for the full financial year, also, do you expect your revenue growth to be higher than the guidance?
No, we had given a guidance of 55 to 60%, definitely, but we'll stick to the guidance for now. And if any changes are there, I've clearly said that there will not be any down trend towards this guidance. So any upward trend is there, probably we'll let everyone know at the appropriate time.
So you have been, and are you looking to launch new products? How does that work for, how has the new launches worked out in Q1?
We have already got qualified for roller screws, which is a 100% import substitute. And that's something we had to do R&D for almost 2 years to achieve that. And that's till date, the imports have been happening from Rolls-Royce, Sweden by all the defense and space companies. And with this, that completely qualifies for the Atmanirbhar Bharat, what our government of India is looking for. And similarly, the electromechanical actuators, it's already under advanced stage right now. We're working on a lot of other products like bellows. We got qualified, which is another import substitute. So a lot of such products are being added to the kitty in a big way. Ultimately, we want to create a big product basket or a portfolio for the company in terms of import substitutes. And that's what our goal is. And that will become a very large segment moving forward over the next 2 to 3 years.
Your net working capital days have gone up because of the supply chain and logistic issues that we are actually seeing globally as well. How has that worked out in the quarter gone by, and how do you see this to move by the end of FY23?
We have worked a lot on that. Obviously, the inventory levels were high. We can't just overnight bring down the inventory levels. Still, there are issues, but obviously, our working capital number of days have come down compared to the last financial year in the first quarter itself. And we are trying to move it further down to a comfortable levels by end of this year. And that's the goal. And probably we would definitely achieve that subject to things being stable as far as the external factors are concerned.
All right, Mr. Reddy, we'll leave it there. Thank you so much for joining us on the show, talking about the quarter gone by for MTAR Tech and what lies ahead for the company in FY23 as well. That is Mr. Parvat Srinivas Reddy, who's the MD at MTAR Technologies.